Hello, fellow chartists. Welcome to my YouTube channel. I am the Chartist, and today is the end of the week, and the SPY ended pretty bearish today. Well, choppy, but ultimately it wasn't bullish. We're gonna do a little something different today, okay? I do have my Discord. I just want to mention that to you guys. Every morning I share support and resistance levels with the group. All right, and the strategy is simple. You enter as support to resistant if you were bullish, and you show that resistant to support if you were bearish. Okay, I had support at 430, 427 to 428 on the SPY today. SPY pretty much bounced off those support levels. Well, this support level chopped around the 430. It tested 434 resistance level in the pre-market today, but didn't quite test it in the trading hours. So, tough to trade type of day, okay? But gonna look back at the chart right here, zoomed out, okay? So these white lines that you see right here, these are my Fibonacci levels. Starts at the March 2020 low, all the way down here, and ends at the high, okay? The high in January, early January high right here, okay? So as you can see here, on this day, February 25th, we gapped way below, tested a 410 support level, gapped way below the 23.6 retracement level. That level is currently at 418.4. We gapped below it, managed to recapture that level, and went up and try to recapture this multi-year blue trend line. Okay, somebody asked that I zoom out and talk about this trend line a little bit. As you can see here, multi-year starts in November 2020. Got a few touches here. March 2021 low as well. These aren't really touches. They're close touches, but this is definitely a touch. Touch over here. Got a few touches around here around the late January 2022. We lost it back in February 18. Recapture. We tried to recapture it late February. Lost it again. Retest. So, yeah, I'm pretty bearish on the SPY right now unless we can recapture that multi-year trend line. Otherwise, like I always tell you guys, we got to play it level to level. All right, next major support that I got on a, zoomed in more, I got around 420 to the 418 support level, okay? But based on Fibonacci, the exact level is 418.4, okay? As long as we do not recapture this multi-year trend line, I am favoring more downsides, unfortunately, okay? Because I'm a price action trader. I'm going to talk about seasonality in a little bit, and it's possible that we are entering bullish seasonality. But I want to stress that price action should be, and at least for me, is the number one indicator. Okay? So, like I said, to be bullish, we have to recapture the multi-year blue trend line. So SPY above 436 would be a good level to make me bullish again. Okay. Other than that, I still have the 430 and 427 to 428 support zone. Okay. Those levels held today. So let's see if we can recapture 436 starting next week. But if we don't, below 427, I think we will sell fast down to the 23.6 retracement, 418 to 420 zone. And if we lose 418.4, we can sell down and test the support line of this megaphone pattern. For me, it's under 400. Okay, there is a gap fill that needs to be filled back in April of last year. That's around 400 to 403 zone. All right, that can serve as a support. But if that failed, I got support around 394 to 395 based on the support of this megaphone pattern, okay? So, as you can see, zoomed out, we are still technically speaking in an overall uptrend, okay? So, there was that 418.4 was 23.6 retracement level, and it did give us a strong bounce. So, if we test it again, I'm not too confident that it'll hold, okay? But we'll see. All right. we'll get more to that if 427 is lost. As of right now, since 427 support held, 430 is still the support as well. So we'll see if we can recapture this blue trend line. All right. Now this is the VIX. Now if I pull out all of the moving averages that I use, 5-day, 13, 50, 220, the VIX is above all moving averages, guys. So this is not a good sign if you're a SPY bull. The VIX is bullish. When you got the moving average stacked on top of each other like that, that's a bullish chart, guys. And it tells you this is bullish momentum. A lot of bullish momentum. So until that changes, it's not very safe to be a SPY bull right now. Okay? Now I know I'm sounding bearish right now, but there is one thing that that the bulls have, and that is seasonality. As you can see here, seasonality. We don't trade based on seasonality. We just track it based on the last 20 years averages. It's just data. You can do what you want with the data, but according to this data, we are entering a bullish season. Okay, now this right here was the first week of March. We were supposed to get an up move, then a down move. All right, and a little before the beginning, the second half of March, maybe the second week of March, towards the second half of March, it's supposed to find a bottom and start moving to the upside. That's based on the last 20 years average. Okay, so we are now, technically speaking, based on this seasonality, we are now entering bullish seasonality. Okay, take that with a grain of salt. I felt like it's worth noting because price action is pretty bearish right now. So figured I'd share this to give the bulls a little bit of hope. But like I always say, price action is number one. We are overall, as you can see, we are in a bull market. This downtrend that we are experiencing is a medium term long trend, a downtrend within a long term uptrend. Okay, so it's important that we watch the support levels, of course. All right, that I mentioned. So as long as we are under 436, I am bearish on the SPY. Of course, I'm still gonna play it level to level. All right, I'm still gonna short at resistance. I'm still gonna long at support. Okay, because remember, I'm neither bull, I'm neither bear. I don't try to predict the market. I'm not biased to any side. I like to scalp, guys. I like to scalp. I do. So that's just my thing, and if it's your thing to be bull buyers or bear buyers, I hope it works out for you, and I hope you make a lot of money. But if you follow the strategy, long at support, short at resistance, whether you bull buyers or bear buyers, you should be able to make money in this market. As long as you're disciplined and follow your strategy. 90% of traders lose. That means 90% of traders do not follow a strategy, or they're not disciplined. But the odds are against us, but it doesn't mean it's impossible. So yeah, I'm blabbing today. Let's just move on. Triple Q. I'm zoomed out on Triple Q as well. Starting from the March low, 2020 low, to the high in November. We recently bounced off the 38.2 retracement around 316 or 318 zone down here. Came back and retested a 23.6 retracement. So this is not a good sign for overall for the Triple Q, okay? Because, as you can see in this zone right here, all right, this zone right here, that's a downtrend. Lower lows, lower highs, okay? So for me to be bulls on Triple Q, we need to recapture that 23.6 retracement. That's currently at 351.69. If Triple Q is above that, I'll definitely be bullish. Okay? As long as we're below it, we are at risk to go back down and test the 38.2 retracement level around 316 again. And if we lose that, 50% retracement level is in play. That means the correction continues, and that 50% retracement level is a big down move to 287.59. Okay, guys, so just let the levels guide you some way, somehow. Yell at yourself. Write it in the journal. Is it, you want to go long? Is it support? The answer is yes, take the trade. The answer is no, stay on the sidelines. Okay, doing the same thing with Dow Jones. We are zooming out today. So as you can see here, back in February 23, we bounced off the 23.6 retracement level around 325.54. That level must continue to hold. All right. Now, if we zoom in on this, we got to zoom in on this one. If we zoom in, you can see that Dow Jones is on the downtrend. Okay. So we'll see. For me to get bullish again, it would have to break out of this orange resistance line right here that represents the downtrend. So above 348 could put all-time highs in play again. All right. But below 325.5, it's not a good sign. All right. We're going to see. We got some more support levels, but definitely more lows incoming. All right. IWM, we have a double bottom potential on IWM, and that is also off of the 38.2 retracement level around 187.95. Bounce twice. That puts 209.66 in play, the 23.6 retracement. But as of right now, not looking too good. It's looking pretty weak. Might come back for another test. And if we get that third test, I don't think we're going to bounce again. And we could see more downside for IWM. All right. So that 187.95, we're zooming out today. That's a big critical level. Tesla, not going to zoom out for this one. But it's losing the 200-day moving average. 200-day moving average at 839.78. Going to put it this simple. If it recaptures that, I'd be bullish. And we could retest the orange resistant line, 854.2. And then the blue line, the blue multi-year trend line up here, 874.35. That's been around since May of last year, as you can see. Had plenty of touches. Okay? But as long as we're under the 200-day moving average, I'm bearish. 819 next support, 766, 727, and then 698. All right, guys? Got Bitcoin. Bitcoin false breakout, as you can see. Next support is around 36.5. Probably going to break that. I probably look to, the next support around 28.7. Okay? Now we zoom out. That next support. If 36.4K fails, that's a 50% retracement level. We got the 61.8 retracement level around 28.7. Usually, according to Elliott Wave, that's usually around the level where corrections end. But we'll see what happens, okay? But as of right now, false breakoff on the blue trend line. I am bearish on Bitcoin. All right, guys, that's it. All I have for you guys today. Have a good weekend. Talk to you all soon.